Hi everyone, welcome to Altcoin, Bitcoin, Crypto, ABCs to Wealth. Today I want to go over a few things concerning the mention of Ripple and XRP in a document from the Federal Register that was just made known to the XRP community this week. There's been a great stir created in the cryptocurrency space in general, and for a good reason. The very asset that so many have mocked and ridiculed us for so long for holding on to in the up and down market uh, has now been mentioned in the official United States documentation. With this being the case, it doesn't matter that the price is sub 25 cents or that on the surface of everyday life there seems to be nothing happening with the product of Ripple or XRP. It only matters that finding a document from those who call the shots naming Ripple and XRP has been found and has surfaced is the important thing. We know that all the maxis of the other tokens and projects in the cryptocurrency space are sitting up and taking notice. Some of those in the space, I'm sure, knew deep down inside that this would happen, and some were even closet XRP holders because they were smart enough and they hedged their bets and they held on just like we have. But then there's some others in the space though who are shaking their head and shaking in their boots because they didn't do that, and they put all their crypto eggs into one basket. But enough of that. Let's go on to the actual documentation here and see what comes of it. The Great Gatsby on Twitter is the one who actually, as far as I know, on December 12th had made known the Remittance Transfer Act. And here it is right here. And when you go to that page, you find out that it is here on the Federal Register under remittance transfers under the Electronic Funds Transfer Act Regulation E. And the basic summary here says the Electronic Fund Transfer Act, the EFTA, as amended by Dodd-Frank Act, establishes certain protections for consumers sending international money transfers or remittance transfers. The Bureau of Consumer Finance Protection, which is known as the Bureau here on out, Remittance Rule in Regulation E, known as the rule, implements these protections. The Bureau is proposing changes to the rule to mitigate the effects of the expiration of a statutory exemption that allows insured institutes to disclose estimates instead of exact amounts to consumers. That exemption expires on July 21st of 2020. And in addition, the Bureau is proposing to increase a safe harbor threshold in the rule related to whether a person makes remittance transfers in the normal course of its business, which would have the effect of reducing compliance costs for entities that make a limited number of remittance transfers annually. It's interesting when you look at this summary here that there's two things I want to point out to you. Look at it here. It says in the middle of the paragraph here on the summary, it says the Bureau is proposing changes to the rule to mitigate the effects of the expiration of the statutory exemptions that allows insured institutions to disclose estimates instead of exact amounts to consumers. It's interesting that they allow them to give them estimates instead of exact amounts when the government is usually pretty exacting on exact numbers and exact amounts. But here in this, they've allowed the insured institutions to give estimates of how much it would cost somebody to create and to send a cross-border payment. And it's also interesting to note, too, that the exemption expires on July 21st of 2020. And this is another part that we'll get into here. It says down here after that, it says, in addition, the Bureau is proposing to increase a safe harbor threshold in the rule. When we'll get to that as we go on. But let's take a look. It says here that the FTA as amended by the Dodd-Frank rule, or the Dodd-Frank Act actually, and just for the sake of interesting, the Dodd-Frank Act here in Investopedia, it says the Dodd-Frank Wall Street Reform and Consumer Protection Act is a massive piece of financial reform legislation passed during the Obama administration in 2010 as a response to the financial crisis of 2008. It's interesting that in response to the financial crisis, they added more regulations to try and stop what they created in 2008. And of course, we know that where we sit today with the repo market and everything, that they didn't do anything at all of trying to stop any of this. They just added more regulations to it. So it goes on to say here later, it says, the act contains numerous provisions spelled out over roughly 2,300 pages that were to be implemented over a period of years. Dodd-Frank established a number of new government agencies tasked with overseeing the various components of the act and, by extension, various aspects of the financial system. It's interesting to see here that the Dodd-Frank Act was actually adding more pages of regulations and added more government agencies, as if we didn't already have enough. But that's enough of that. Let's get on with the the actual registry. Here we see in the documentation, in the context of it, it says recent market developments and potential solutions. In the assessment report, the Bureau observed that the remittance market has undergone substantial change since the rule became effective. The assessment report described several developments regarding the growth and incorporation of innovative technologies by providers of cross-border money transfers and other companies that support such providers. Interesting. The Bureau has continued to monitor the remittance transfer market since the publication of the assessment report and observes that most of these developments continue to progress. Examples include 1. The continued growth and expanding functionality of the Swift Global Payments Innovation, the GPI tracking product, which can increase the amount of upfront information available to sending institutions. Get that. It increases the amount of upfront information available to sending institutions, such as cost. And the expansion of the major payment card network's capacity to support cross-border payments. Number 2, the continued growth of fintech, non-bank remittance transfer providers, and their further expansion into partnerships and other relationships with banks and credit unions, which allows such entities to tap into the closed network payment system that non-bank remittance transfer providers have developed. Can anybody say MoneyGram? And number 3, the continued growth and expanding partnerships of virtual currency companies such as Ripple, which offer both a payments messaging platform to support cross-border money transfers, as well as a proprietary virtual currency, XRP, which can be used to effect settlements for those transfers. Next line states, these developments suggest that in the future there may be means by which banks and credit unions could reduce the remaining reliance on estimates. So these guys are saying that using XRP and Ripple, they don't come out and say it, but we know, for those of us who understand the tech, that XRP, which is designed by Ripple, will give an upfront amount to the person sending the money for remittance, and the company that is doing the remittance for them will be able to say, yes, it will cost you ABC amount of dollars or pesos or yen, whatever, to send this money, and there will be no extra fees involved with it. So that basically is that in a nutshell. Now, what I want to do too here as well, I want to take a look at the at a little bit of the safe haven stuff that they were talking about here. As you look at and go into the form here, which is actually found right here, it's the Consumer Financial Protection Bureau, December 3rd, 2019, unofficial red line of the 2019 proposed amendments to the remittance transfer rule. As we read earlier, that there was a red line, and on December 3rd, they go through this and they put all this together. It says right here, it says the normal course of business. Number 2 here, it says safe harbor, which they had referenced in the document we read. For purposes of paragraph F1 of this section, a person is deemed not to be providing remittance transfers for a consumer in the normal course of its business if the person A, provides 500 or fewer remittance transfers in the previous calendar year, and B, provides 500 or fewer remittance transfers in the current calendar year. Transition period coming into compliance. If beginning on July 21st, 2020, a person that provides 500 or fewer remittance transfers in the previous calendar year and provides more than 500 remittance transfers in the current calendar year, and if that person is then providing remittance transfers for a consumer in a normal course of its business pursuant to paragraph F1 of the section. The person has a reasonable period of time not to exceed 6 months to begin complying with this subpart. Basically, what they're saying is that you have a transition period to qualify for the safe harbor, and it's interesting that they increase the provisions from 100 or fewer remittance transfers in the previous year and the current year to 500 remittance transfers in the current year. It must be that they're going to see such an increase. They must know that they're going to be such an increase that they've got to make that threshold greater than the 100 that was here prior, or else they could have some problems with their red line. Now, I don't really know, but that is, basically the way I see it here. And I don't think there's anything else I want to cover in this document. It doesn't look like it. So we'll go back to page 3 here. And again, qualifying for the safe harbor, if a person who previously provided remittance transfers in the normal course of its business in excess of safe harbor thresholds set forth in this paragraph determines that as of a particular date it will qualify for safe harbor, it may cease complying with the requirements of this subpart. Basically just more legal mumbo jumbo that they throw in there. But pretty much it comes down to this here, where the government is seeing this and they've got to know all these things that are going on behind the scenes. It's interesting to look into this and see these provisions and see what they consider the normal course of business and the adjustments that they're making to this to cause these people or to allow these people to come into compliance with this. And it's interesting that they've got all this in the documentation. And of course, if we've got documentation here dated December 3rd, then they've been working on this way before the document came out, because you know how government is with the red tape and how slow it churns along. So although in the eyes of the world, quote unquote, the U.S. looks like it's just sitting on its hands and doing nothing, we know here with a document dated December 3rd of this year that they've been working on this the whole time. It seems like they've been doing absolutely nothing. So my word of encouragement to all of you who are XRP holders, whether you've been in this game for a short time or a long time, hold on, stay the course, don't give up the ship. Reference you to a video that Mr. B did earlier today where he said, I'm not quitting, I'm not giving up on XRP, there's no way, there's no possibility. I want you to just take a look at Mr. B XRP's video from today on YouTube and check out what he had to say about don't give up the ship, dated today, December 14th. And when you do that, think about what you've put your money into, if you have, or if you're considering XRP, or if you've been watching from the sidelines and you're not sure about it. Here's some more food for thought for you. Now, as it comes down, as we end this here, I'm not a financial advisor. I do not suggest that you take any of this as financial advice. All I'm saying is this is my opinion. This is what I've seen. Here's the documentation. I threw in a few of my thoughts along the way. I just wanted to lay this out here for you guys to be able to see a little bit further behind the scenes of the document, what was going on with a few of the other things. And for those of you who are XRP holders such as I am, I just wanted to encourage you, just like Mr. B encouraged you earlier today, and the Digital Asset Investor did, and Brad Kimes has along the way, and all the other people in the space who have been so good to encourage us over this long bear market of 2 or 2+ years, to keep us going and keep us rolling and keep us encouraged that our day's coming, our ship's coming in, and there will be a day where we will be able to look back and say, "Yep, I'm glad I stuck it out," and that's the day that I changed my life and the life of my generations of my family to come. When I decided to get into XRP, when I found XRP, and I'll tell you what, for those of you who are just finding it right now, you're in at a good time. Although we're sub 25 cents, it doesn't matter. Get in, get yourself immersed in the tech, get yourself immersed in understanding what it's all about, and then based off of what you understand about the product, about the company, about the team, about the vision, about the tracks that have been laid down, the plumbing that's laid down, the foundation that's being built. I encourage you to, uh, once you've done your own homework, then make your financial decision based off of that. But take all the pieces of the puzzle that you see, take all the voices that you're hearing or listening to, or those that you will listen to in the future, and keep going. And look into the XRP community if you're new and see the voices out there, and uh, take your time to listen to each and every one of them and to see which ones kind of ring true with you, and then take the time to follow them, listen to them, hear what they have to say, and interact with them and become part of the community. Take care, and we'll talk to you on the next one.